Hello my dear friends and welcome to StudyIQ. I am Joycey Joy and today in this lecture we will discuss about angel investments. First of all, let us understand what is the current affair that was related to the angel investments in the economy. The tax provisions for the angel investments are proposed to be changed. So this will have a serious impact on the investment rate in the economy, especially in the angel investments which finance startups in the economy. So we will have a detailed analysis of this issue in this lecture. Let us start with understanding who are angel investors. So who is an angel investor? Angel investor is an affluent individual who provides capital for a business startup. Suppose you are planning to start or introduce a business startup. So as an entrepreneur or as a young entrepreneur, you want to start this startup but you do not have finance to start your business. So angel investor is a person who will finance your startup. So usually angel investors are affluent individuals who will provide capital for a business startup, and in exchange of the capital provided by the angel investor, you will have to provide a convertible debt or ownership equity. So in return, convertible debt or equity is provided to the angel investor. Now, what is the issue that is associated with angel investments or angel investor? The major issue was regarding money laundering. And how does angel investments lead to money laundering? There were many instances where individuals were using unlisted companies to use angel investments. So what happens is that black money would be received as angel investments, and this could be easily converted into white money in the name of angel investments. So this has led to the issue of money laundering. And because of this issue, in the year 2012, in the union budget that year, a taxation provision on angel investment was introduced, and this was known as anti-money laundering provision. So an anti-money laundering provision was introduced in the 2012 budget, and this was to eliminate any chance of money laundering through the angel investments. And what was this anti-money laundering provision? This provision states that angel tax will be applicable when any closely held company issues shares to domestic investors, and this would be applicable if the shares are issued at a price which is higher than the fair market value. So here three things are important. Let me explain it to you. The first one, angel tax. So what is angel tax? Angel tax is the tax introduced by the government in 2012 in order to tax the angel investments. So angel tax would be applicable in certain conditions. Now we will discuss about the conditions, but before that, this is a part of anti-money laundering provision of this angel investment. So angel tax was introduced. That means angel investments would be taxed in certain circumstances or under certain conditions, and there are mainly two conditions. One is that if the shares are issued by a closely held company. Now, what is a closely held company or a closely held corporation? So, a closely held corporation is any company that has only a limited number of shareholders. This is a closely held corporation. So, in a closely held corporation, the number of shareholders would be minimum or very less. Anybody can set up a closely held company with few shareholders. So the first condition, if it is a closely held company, and the second condition is that if the shares are issued at a price higher than the fair market price. Now we will come to what is fair market price later in this lecture. So in these two conditions, an angel tax would be applicable to the angel investment. So, under the provision provided by the government in the anti-money laundering provision, the excess amount will be considered as income from other sources, and this will be taxed at 30% under the section 56(2) of Indian Income Tax Act. Now coming to the second condition, that is fair market value. So the second condition was that if the shares are issued at a price which is higher than the fair market value. Now let us understand what is this fair market value or how this fair market value is calculated. So the calculation of fair market value is done through book value or discounted cash flow methods. And after calculating this fair market value, an assessment would be done by the assessing officer. Now let us understand what is book value or what is discounted cash flow method. So first coming to the book value. So what is book value? A company's book value is its total assets minus intangible assets and liabilities. Now the second one is discounted cash flow. So what is discounted cash flow? It is a valuation method which is used to estimate the value of an investment based on its future cash flows. So here future cash flows is important. So this is how the fair market value is calculated or considered. So book value or discounted cash flow method, and under discounted cash flow method the calculation is based on future cash flows. Now the condition of the government was that if the price of issue of the share is greater than the fair market value, taxation would be applicable. That is, angel tax would be applicable to the angel investment. Now let us understand what are the concerns regarding this. The first one is regarding the accounting income. So we have seen that under the discounted cash flow method, it is based on the future cash flows, and the accounting income arises only when business uses its capital to create a product which yields the profit. So how is income generated in a business? First of all, the business should have a capital, and this capital has to be deployed effectively to create a product or production. It can be a production or service. So after that, the sale of the product or the service will yield the profit to the business. Now we are talking about angel investment, that is capital deployment in the business. So before deploying capital, how can we estimate the future cash flows or the profit? So this is the first concern. Now the second concern is regarding the valuation of book value. The valuation of a business is an issue that is left to the venture and the investors. So this is another cause of concern. And thirdly, taxation on angel investment which promotes startups is a cause of concern, because if the country is taxing domestic investors or the homegrown startups, this will have a negative impact on the investment rate in the economy. Now let us understand how did government respond to this concerns of the startups and also the angel investors. The Central Board of Direct Taxes recently granted some relief from this taxation for the startups. But this exemptions would be applicable if the startups comply with the conditions notified in the DIPP. Now, what are the qualifying conditions provided by the DIPP? It has provided conditions for both the startups and also for the angel investors. In case of the startups, the DIPP stipulated that the maximum cap of paid up capital and the share premium should be 10 crore. So the cap was put as 10 crore, and in case of angel investors, a minimum average returned income of 25 lakhs for the preceding 3 financial years or a minimum net worth of 2 crore as on the last date of the preceding financial year. And along with these conditions, in order to avail the exemption, the startups will have to first get a recognition to be eligible as a startup by the DIPP. And this eligibility should be followed by a specific application to the IMB. So following the application for getting the recognition as a startup from the DIPP, it should apply to the IMB. IMB is the Inter-Ministerial Board of Certification, and IMB will issue shares without triggering the angel tax provisions. And also, along with this, the application to the IMB must be accompanied by a fair valuation certificate from a merchant banker. So these are the qualifying conditions. Now, what are the challenges in the qualifying conditions provided by the Central Board of Direct Taxes? The first one is regarding the capital. So the capital threshold was set at 10 crore for the startups, and because of this cap put on the capital, this is likely to benefit only a small number of startups, especially for those startups who are involved in the capital intensive business. They will have definitely capital of more than 10 crore. So startups which are focused on capital intensive business will not be impacted or benefited out of these recommendations of the government, and certain conditions are put on the angel investments as well. So those investors who are looking into making small investments, they will also be not benefited out of this recommendations. Now there are also various administrative hurdles, because the startups will have to go through a long administrative process, starting from getting approval from DIPP, application to the IMB, then getting it with the merchant banker. So all this will have administrative hurdles. And fourth concern is regarding the past investments. These notifications have come recently and it is going to help only the future investors. So what is the case with past investments made? Those unregistered startups who have already raised their angel investment, they will not be benefited out of these recommendations. And this will result in a prolonged disputes and litigation with respect of their investments who have already made their investments, but those who are not registered. Now what is the way ahead? For a country like India, which is heavily dependent on the startup ecosystem, taxation on the startup itself is a cause of concern, because startup ecosystem will have a positive impact on the innovation in the country. It will also create jobs. It will also lead to economic growth by boosting the investments in the economy. So startups are very much essential for economic growth and development of the country. So taxation on startup itself is a cause of concern. The central government has appointed an expert committee to review these rules. So hopefully the expert committee will come up with valid recommendations. You can find the PDF of this lecture on my Facebook page, and for any queries regarding your UPSC preparations, you can get in touch with me on my Facebook page, or you can email me at joyce.studyiq@gmail.com. Thank you.